Hey everybody, Jake here at TrendSpider to go over the weekend update into the second half of June. We'll start with the S&P 500 ETF SPY, do the Qs, IWM, Bitcoin, and then go into some individual names. So starting with SPY, you can see here that we did break down through this trend zone here highlighted in green. That was definitely a little bit of a status quo change here for the markets because this has held now for about the last 6 months. So the fact that we did break down through this is slightly concerning. We could get a pop and potentially retest this zone, and it could break, and we could continue to the upside and fill some of these gaps above. But for now, we are below it, and that is definitely something to keep in mind. And another thing to keep in mind is the fact that we do have this gap below. And for those that have not used the new gap detector, we have added a new gap detector that just highlights any gap that is below or above and extends it to the right instead of connecting the gaps. So if you've used TrendSpider over the last several months, years, whatever, the gap detection has been called the gap snake, which actually connects the gap. So for example here, if I turned on the actual gap snake, you'll see something a little different. You'll see it actually connects the gaps and makes this kind of I guess what you'd call a snake, or that's kind of was the theory behind it. So delete the gap snake, definitely start using the gap detector. It will easily extend those gaps to the right without connecting any of them, and it's just a lot easier to use. So one thing to just mention, we do have 2 gaps above from last week, just gapping down, but we do have the gap below as well. So the fact that we are below the support zone definitely makes you think that this could be a bigger move to the downside with that gap in play from November of 2020 around 338 or so. Now on the weekly chart, you can see here that we did finally break below the COVID low VWAP, which has been an area that's held pretty well over the last month and a half, and we finally broke down through it this week. We pretty much retested it to the upside, rejected, and then moved pretty hard to the downside. So your next level to watch below would be around 350 to 355, and those are simply just levels that acted as pretty strong resistance in the past in August 2020 as well as October of 2020, and then acted as support after the elections. So all in all, 350 to 355 highlighted in this orange zone on the right-hand side chart, the weekly chart, would be the area that you want to watch moving forward. And then to the upside, just that COVID low VWAP, which is right around 385. Going into the Qs, we did actually hold this trend zone on the Qs. So we have this falling wedge set up. We did hold this trend zone on Thursday and Friday. So that's definitely a little bit of a silver lining here. So the fact that we do kind of have this harami in play, and a harami, you don't actually need the range to be inside the previous range. You just need the body here to be inside the previous body. So you kind of have a bullish harami here on this trend zone that has acted as support in the past and a bounce zone in the past. So something to keep in mind going into the week ahead. And you'll see here on the weekly chart looking very similar to the S&P 500, where we had this previous area in 2020 that acted as both resistance and support back in September and November for the Qs. And we are getting very close to getting to that zone down around 255 all the way up to around 265. So this area highlighted in orange would be your area to watch above, and then below, and then above. We did not technically fill this gap all the way, right around 289 on the Qs. So that would be your level to watch above. And then you also have another gap above right around 299, 300, and that coincides pretty well with this falling wedge resistance. So, it's not resistance until it proves itself as resistance, but it has acted as resistance in the past. And so we'll call that a potential resistance zone moving forward into, the next several weeks if we do get a bounce. Now, looking at IWM, this thing has just been destroyed. So we did fill the November 9th gap here. So right around 166 or so. We filled that on Thursday. We had a bounce on Friday today, and then actually pulled back after testing that area. So your next area below would be the November 3rd, 2020 gap. And then your upside would simply just be, the gap itself that filled on Thursday, but also just this simple area here, just this, what looked like to be potentially a double bottom. And that would be right around 170. So Downside, watch for potentially your 156, 155, 156, which is the gap fill below. And then the upside potential, at least your first level to get above, would be right around 170 on the daily chart. Now, on the weekly chart, you can see here that, we're really just having trouble finding any levels of potential support. If you want to highlight these previous highs back in 2018 and then the highs before the COVID drop, we've even broken down below that. So there's just not a lot of technical levels holding here on IWM. And with that type of weekly candle, there's just not a lot of variables pointing to a bounce, at least at this point. I'd really want to see some type of decent weekly candle before potentially talking about some type of short-term or medium-term bottom. But for now, looking pretty rough. Now, going into Bitcoin, before we jump into some individual names here, I'm going to actually use the Kraken quote here simply because it doesn't have this huge wick that you have in Coinbase. So you can see here for Bitcoin, we do have this, this horizontal level that has held for the last, 6-7 months, and then we finally broke below it and just pretty much waterfalled right through pretty much every potential support zone below. So, right now we're kind of holding this area that acted as a little bit of a consolidation area before the move up in November of 2020. So this area below may act as a support zone if we continue to break down. And that's a pretty big range. So anywhere from around 18,000 up to around 19,500. And whenever you're looking at Bitcoin or crypto in general, you do have to have some pretty big margins of error around these support and resistance zones, generally 7 to 10%. So on the weekly chart, you can see that we are nearing this potential area of support. It's not going to prove itself as support until after the fact. So for now, we are just kind of moving down towards it, and we'll have to see if that holds. If it doesn't, this volume weighted average price, essentially the volume weighted average price of this trend, because we're measuring the VWAP from the start of this trend, that's down in the 14s. So, just remember, especially on the weekends, crypto is known to have some pretty big moves, especially for some reason, like on Friday nights and Saturday nights. So we'll see if that is the case again this weekend with such a rough candle for the weekly chart. But remember, the weekly candle does close on Sunday, so there is time for this to still form before it actually closes for the week. But Bitcoin downside, this trend zone anywhere from around 18 to 19.5. And then if you break that, your VWAP of the trend right around 14 to 14.5. And then if we actually do, catch a little bit of a bid, I would just look at this previous low here from your little flash crash here from May 11th, and that's up around 25,500, and that's also the COVID low VWAP, if I'm not mistaken. So, so that's right, the COVID low VWAP's a little higher here, right around 27. But all in all, I would definitely say just using horizontal support and resistance zones, this previous wick here would be your resistance above if we do get a bounce to the upside. Now, looking at some individual names, we'll start with Amazon. And Amazon's kind of in this interesting setup here. You've got essentially this descending triangle here. So descending triangle is simply when you've got descending resistance zone, and then you've got a horizontal level of support. This has acted as a pretty strong level of support multiple times over the last month or so, and we're still holding here. So a decent candle to end the week, and you can see here on the weekly chart, we're still holding this previous area of resistance. So this was resistance back in 2018 all the way to 2020, and now it's acting as a potential support zone. So until this level breaks, we're kind of in this kind of a stalled area here where price is trying to figure out what it wants to do, right around 10, let's just call it 100 all the way up to around 107. So if we break that, then you would definitely want to watch this potential level below. So if we break this horizontal level, your next level to watch below would definitely be this trend zone below highlighted in green. Now moving on to Meta. Meta did break down through this symmetrical triangle last week, and then just had a continuation down this week. And we're kind of now in the middle of this symmetrical triangle support zone above. and that's at this point right around 185 to 190. But then you also have this area below, this trend zone below highlighted in green, and that's in the mid 130s to upper 130s, and that actually coincides pretty well with the COVID low. So we're kind of trading in the middle of two important zones here, and we'll definitely get a resolution to test one of these. It's just what price action is going to do from here. I would say simply, if we break the previous lows from today and continue down, then you have a better chance of testing this zone below before testing this symmetrical triangle support zone above. One thing I'll mention here, if you turn on the gap detector, you do have this gap above, and that fills right around 175. So this is definitely a market where you want to highlight any gaps in price, because those gaps are really acting as magnets for price, both to the upside and the downside. So one thing that I'll point out here, if we look at the weekly chart, is the fact that we did break down through this trend zone starting from 2016. You can see that this has held really well over the last several years, and actually acted as an initial support zone back in April, and then we finally broke down through it this week. So I would definitely be looking at this isn't the COVID low VWAP. This is your 2013 low VWAP before we really started to break to the upside and break these IPO highs. So this pivot here from 2013 is what I'm measuring the volume weighted average price. And that level is down here right around 135, 136. So it kind of coincides with this trend zone below as well. Next up is Microsoft, another one that did technically break down through this longer term trend zone. So on the right hand side here, we'll zoom in and we'll see that this trend zone did break, and we actually did close below it. But you can see here that we closed right at the COVID low VWAP, almost like to the dollar. So you can see here the COVID low is here. That's where we start this blue line. That's just the volume weighted average price since that reversal point. And you can see that we're trading literally right at it here. And that is a really crucial zone to hold going into next week. But the main thing I'll point out here is the fact that we did kind of lose that longer term support zone, which could be a status quo changer going into the next couple weeks. The daily side of things, though, you can see here that we did hold this falling wedge support zone here. It's acted as support quite a few times. And so, if we do finally start catching a bid, there is a gap above around 265. So definitely start using the gap detector and getting an idea of where these gaps are above and below. Those are going to be your best areas of support and resistance moving forward. AMD, brutal week here. But you can see here that we did hold the weekly channel, the daily channel here. So we tested the upper side of the channel in early June, and we moved straight down to test the lower part of the channel here in mid-June. And a decent candle for Friday, but still nothing indicating any type of mega reversal here for now. And on the weekly chart, you can see here that we do have this bear flag that broke down as well. And what's interesting is if you take the I keep saying the COVID low VWAP because we've been using that so much. The 2018 low VWAP, this is almost right in line with these previous support zones here from 2020 and even into the spring of 2021. Just simply this area here. So 1, 2, 3, 4. And then if you just extend that to the right, it almost is right in line with that 2018 low VWAP. So keep that in mind into the coming weeks. Let's call it around 71 all the way up to around 75 would be your level to watch below. And, there's not going to be any chart that we look at where it's going to be like, oh yeah, 75, 67 has to hold. You're going to have these ranges, especially in this volatile of a market. So start working on, using these zones and these margins of error around these levels you're watching instead of exact to the penny price levels. Next one that we'll go into is Tesla. Kind of a weird week here for Tesla. The main thing that I'll touch on here is the fact that we do have this descending triangle forming here. We have a gap below that fills right around 565. And then we have the COVID low VWAP down here that's right around 520. So, those are kind of the main areas to watch to the downside. And then your upside level simply is just this descending triangle resistance. And one thing about descending triangles is they generally have a little bit of a bias to the downside, but they're actually a lot more reliable and profitable if you do get a break to the upside, at least multi-day runs. Just because you break to the upside on a descending triangle does not mean you're going to have a multi-week run, but you will have a pretty strong move to the upside a lot of the time for a couple periods, whether that's 2 or 3 days. If you're on the daily chart, if you're on a 5-minute chart, that could be the next 4 or 5-minute candles. But definitely keep this setup in mind. A breakdown, you've got your gap below, and then a breakout would simply just be a potential move to the swing high VWAP up here right around 775. You don't have any gaps here to look at as potential gap fills to the upside, at least in the last couple months. So those are your levels to definitely keep an eye on Tesla. We'll move into what really helped the markets continue down this week, which is essentially oil and energy companies. So CVX is the first one that we'll touch on, and this is a tool that you definitely want to check out on the platform. It's called the MA Distance tool. So you just go on indicators and I just type in percent because that will pull it up the quickest. So if you type in percent here, MA Distance percent, I've already got it pulled up here, so we don't need to add it again. But essentially what it is it's a tool to help you see how far are we away from whatever moving average that you want to look at. In this case, we're looking at the 200-day moving average. And if we zoom out, notice that we have not been this far above the 200-day moving average, or excuse me, the 200-week moving average in a long time. So if we highlight this peak here, so this is essentially about 57%, even higher, around 60% above the 200-week moving average. If we want to see the last time that happened, we're just going to have to scroll. And the last time you can see this happen, this big of a move, was back in July of 2007. So interestingly enough, this wasn't actually the high. We continued to move up. But notice that the moving average, the price didn't deviate from the moving average any more than that high, because the moving average was catching up with price that occurred after that. So the 2007 peak of at least the moving average distance was definitely a pretty interesting tell. Obviously that was a pretty big deal in the markets when we, at least especially in the oil market, but the rest of the market, 2007 to 2009 was clearly the financial crisis. Not saying that we're in for another financial crisis, but that is the last time that we were that overextended on oil, which is simply shown by this moving average distance indicator. So something you can check out if you haven't checked it out already. It's a lot easier to just look at this rather than have to pull up the moving average and then measure it, this way. So that's definitely something to utilize, especially in overextended markets, whether they're overextended to the upside or the downside. You can see here that we are really overextended below the 200-week moving average, right around 50% below the 200-week moving average, and that was a low as well. So this will really just help you look for extremes in regards to price and moving averages. So on the daily chart, you can see here that we did break below this trend zone here that has acted as support quite a few times over the last 10 months or so. So the fact that we did close below it with a pretty strong candle would definitely get the September low of 2021 in play here, right in the 140 area for CVX. And I mean, if you look at the weekly chart, there's even a longer term trend zone here, and that goes all the way down to the upper 120s and the mid, let's up all the way up to around the mid 130s. So maybe a little bit of relief at the pump, we'll see, but it's definitely not helping the overall market, since energy in general is what really held them up over the last couple months. XOM, this is a really cool case study on looking at different patterns. So we'll start with the left chart. This is the daily chart. And you've got your December low here. This was a pretty important pivot. That's where you want to start your volume weighted average price. You can see here that it's held support multiple times, or acted as support multiple times, as we continue to hit new highs and higher lows. So if we do kind of use this as a gauge of where we could potentially move down to and potentially bounce, that is down in the lower 80s at this point. So just pretty classic, literally hit all-time highs right around 105, and then that was your high, and just pretty much straight down since. Now, one thing that I definitely want to point out here, This is utilizing the pattern recognition. So if you turn on patterns here and you just type in shooting star, we're using the one line shooting star. So that means we're just looking at the single candle pattern. You'll see here something interesting. From the lows, we moved up about 240%. And if I just delete this, you'll see that the system only has one shooting star that has printed since this low, and that is literally the top here. So this was a pretty good indication last week that we may be at least topping out short term. And then same thing here. We can just simply connect this wick to this wick here, capture some of this price action, and you can see here that your trend zone below is even in the mid 70s on this. So if this holds here on the daily chart, the December low VWAP zone is around 81 to 85. But then if we break down through that, then you also have this weekly trend zone below, and that goes all the way down to, let's say, 76 to around 80. So those are your levels to watch the downside. To the upside, you simply just take a VWAP from this high. You can see that this thing's just plunging here. So, a VWAP, at this point when a VWAP's dropping that quickly, I haven't found it to be that useful. At this point, I would simply just highlight this previous area that acted as support for a couple days earlier in the week, and that's right around 93 up to around 94. So all in all, not a great week for a lot of names out there. Energy joined the party over the last couple weeks, helping the markets definitely hit new lows on this bear market to move to the downside. But all in all, there's a ton of different ways you can use TrendSpider to get an edge in this market, whether it's going up, down. Technical analysis doesn't care what direction the market's moving. It just cares about trends. It cares about patterns. And that's exactly what you can really identify here on the platform. Different patterns, trends, VWAPs, really anything you can imagine. It's pretty much on the platform. And we've got plenty of other things that we plan on adding in the near future. So definitely give it a try. If you haven't, we have the 7-day free trial. You have really nothing to lose by just giving it a shot. And remember, if you do enjoy these videos, please like and subscribe, and hopefully they're helpful. And one, seeing a different perspective in the market going into the week ahead. And then two, getting a better idea of how you can utilize TrendSpider in your trading and market analysis in general. Everybody have a great weekend, and thanks for watching.